Hi, I'm Brandon Nelson. I'm a senior portfolio manager at Calamos Investments. I manage the small cap growth strategy. Our mutual fund ticker is CTSIX. I also manage the SMID growth strategy. The mutual fund ticker there is CTIGX. I started a company called Timpani Capital Management back in 2008. Ran it for 11 years, and myself and my team joined Calamos in 2019. And just to honor our roots as Timpani Capital Management, we kept the word Timpani in the names of the two Calamos mutual funds that we manage. So small caps tend to be a winning asset class. I know they haven't been leading the market in the last 8 to 10 years or so, but if you look back over a longer period of time, they have been a phenomenal asset class, the best asset class, in fact, within the equity markets. The reason why that's the case is small caps are priced less efficiently. There just are fewer eyeballs looking at small caps. And the probability of finding a big winner in the equity market is substantially higher in the small cap space. Small and micro make up about 77% combined of the big winners. So really just looking at the math of the situation, if you want to have the best chance of finding a big winner, you need to look down market cap. Now, with that upside volatility of small caps, there's actually downside volatility too. So it's important to also have a strict sell discipline if you're going to traffic in small cap stocks. We have that. We're very good at selling stocks. We keep a short leash on all of these stocks. The businesses can be volatile, and our sell discipline is proven to add a lot of value. Stocks that we sell tend to persist as losers after we sell them. We're good at finding big winners and letting them run. We're also good at cutting losses quickly to avoid problems. Right. So it's buying winners, letting them run, cutting losers quickly from a high level, but really digging a little deeper, we're looking for stocks that have what we'll call fundamental momentum. Two things make up fundamental momentum. Number one, it's sustained growth for many quarters and hopefully years. These are open-ended growth situations, often where a company might have, only 1 or 2% market share, but over time that's going to grow to be 8, 10+% market share and doing so profitably. So sustainably fast growth. And then number two, underestimated growth. We want to find situations where companies have a knack for beating expectations. Not only are the management teams good at growing the business, but they know how to manage expectations. That's a really important part about being in the public limelight. And if you can show both of those characteristics, fast growth and underestimated growth, the market really tends to gravitate towards those types of stocks. And the market will reward those stocks with higher and higher valuations as time goes by, and the markets could see that sort of execution and see those characteristics on a consistent basis. So we try to find stocks that are relatively undiscovered, that are about to go through that period of showing fast growth and underestimated growth, and then riding the wave of the market embracing those types of stocks. Right. So I've been working with this investment approach for my whole career, which is over 29 years now. And I can tell you it usually works. The market tends to really embrace these characteristics, this fundamental momentum that has shown up in our performance figures of the mutual funds that we're running today. You can see the shorter term performance is great, as well as the intermediate to long term performance. There are, air pockets here and there. The market 100% of the time doesn't embrace it. I don't know a investment process that does get embraced 100% of the time, but this one's got a very good chance of being embraced in most environments. And so it's an investment style that tends to work. But then on top of that, we added an additional layer of value with the stocks we choose, the investments we're making. We spend our time, myself and my team, talking to companies, interacting with other analysts in our network of contacts, trying to find stocks that have that fundamental momentum profile. And so we've added a lot of value over the years doing that and positioning our portfolios to really benefit from that fundamental momentum shining. So really a combination of a proven style and then strong company-specific selection on our part.